Okay, let's start the proceedings of the session. A very warm welcome to all of you out there. Greetings of the day. I hope and I pray that every one of you is doing great. Well, the purpose of today's session. Well, as we all know that your exams are around the corner. And when I say your exams are around the corner, I mean, not much days are left. Not much days are left. And you have around 1 month and few days for your June 2024 attempt. Results have been out. And those students who are planning to give AAA in June 2024, they are now rock confirmed that yes, we are going to appear in this paper. There are few students who are appearing for the very first time, but there are many other students who will be reattempting this paper, most probably on account of their past failure. So the objective is that we have to pass this in the upcoming attempt. We have to clear this paper in the upcoming attempt. This paper gets frustrating for many students. Students attempt and reattempt and keep on attempting this paper time and again, but this paper proves to be a pain point for them. So we'll try our level best that in the remaining days, through the live sessions, through the recorded content, we try to make this paper easy for you. It's not that difficult. It's not as difficult as you are thinking. It's possible, it's doable, and students do pass this paper with few smart techniques. Okay? And we'll try to teach you how are you going to approach the paper, what is the exam technique, how are you going to draft your answers, and our live sessions will be primarily focusing on this objective. Okay. So this is the planner for you. This is just for the reference purposes, just for the dates, I would say. It's for the dates, because we'll be covering the topic whatever we wish. Okay. I'll be telling you in advance that you have to look at these questions or you have to look at this content. And then we will be broaching these questions in of the CV practice platform, the way which you will be attempting in your examinations. Okay. So it's 23rd of April today. The remaining dates, the coming dates, the coming session, the dates of the coming sessions is also given in this planner. There could be changes. There could be changes in days, but that will be communicated to you. Okay. So today is 23rd April, and today is our first live session, the series of the live sessions for June 2024 attempt. Okay. As I've already told you that the objective of these sessions will be practice. These will be practice-focused sessions, practice-oriented sessions. And we will not be spending a lot of time in discussing all the concepts of this AAA because we are assuming that by now you have gone through many concepts. Those students who have already appeared this paper multiple times, they already know the concepts. Or if you haven't gone through the concepts, then you have to refer the portal, LMS, and there are conceptual videos of every topic which you'll have to cover. And those videos are not so much, and you can easily cover in the days which you will be having before these practice sessions. Okay. So what will be our objective in today's session? We will be revising, recapping few areas quickly. Okay. We will be revisiting the exam techniques of few key areas quickly, not very much detail, but the information which is necessary for you, the information which is needed for you so that we can get on to the exam papers. Okay. Okay. This is a brief introduction about myself. I'm a tutor for these subjects, AAA and SBR. having lots of years teaching experience now. I myself am a practicing auditor and a partner at my own firm, HM Chartered Accountants, fellow member of ACCA, fellow member of ICAP as well. And you can find my contact number in details here. Okay. Okay. Session agenda. We will be discussing about paper pattern and key areas. We will even not be discussing about the overview of the syllabus. Okay. Paper pattern and key areas. Then we will be quickly recapping few conceptual areas and few exam techniques, which we will be applying in the upcoming session, because in the upcoming session, which will be on Thursday, we will be practicing question number 1, complete question number 1. Okay. And we will try to look at question number 1 of the last 2 attempts. That is September-December 23 and March-June 23. The last 2 attempts which are available at CV practice platform. Because our main focus is this: practice, practice, and practice. I hope you can see my screens. Can you please reconfirm me? Sometimes this has also happened, that screen was not visible to students. Can you see my screens? Can you see this pointer? Can you see this? Great. So I'm not talking about the syllabus. We've already discussed this in the orientation session earlier. Okay, just hold on for a second. Okay. So, point is that in this syllabus overview, you can refer to the orientation session, which is already available at the portal or at the YouTube channel. But the point which I will try to emphasize is that the key learning objectives, the important learning objectives, those which are focused by the examiner a lot. This is one of those. Specifically, Code of Ethics for Professional Accountants. Okay? Ethical considerations, very important. Okay? From learning objective C, very important, very important. This entire learning objective is very important. This, again, this entire learning objective, okay, just hold on. This entire learning objective is very important. Completion, review, and reporting, without any exception, because everything has been tested and examiner tests these learning objectives in quite great detail. Other assignments, the entire is important. Okay, so just to highlight and focus on important areas. Professional skills, obviously, 20 marks, very important. So the students start questioning, if everything is so important, then what is unimportant, except few areas. Since this is a professional examination, so you can expect anything on this paper. anything which is covered under the ambit of audit and other services, you can expect this in your examinations, okay? Therefore, it's highly discouraged that you go on for selective studies. You have to pass this paper. You have to make your objective passing this paper, okay? Exam pattern. Exam pattern is very straightforward. Question 1, question 2, question 3. First of all, we will be focusing on question number 1. And I've already told you that in the upcoming session, we will be focusing on this question. Question number 1, the last 2 attempts, the latest 2 attempts. The latest 2 attempts. We will be focusing on question number 1 of the latest 2 attempts in Thursday's session, okay? But this question is based on audit planning stage. Could be an existing or a new client. What are the key areas which are tested? Risk assessment. And when we say risk assessment, we talk about both types of risks. Business risk, risk of material misstatement. What has happened? Ethics, usually ethics. And last but not the least, procedures analysis. So you'll usually see these 3 types or 4 types, in fact. Business risk, risk of material misstatement, ethical considerations, procedures and evidence. You'll see these 4 elements usually in question number 1. It's not a hard and fast rule. I cannot say that you cannot see any other topic. You cannot see any other topic in question number 1. You cannot see any other requirement in question number 1. No. Usually, these 3 requirements are visible in question number 1. Okay. So, we will be discussing the key areas. We will be discussing the key aspects of these 3 areas today so that we can start looking at questions. Question number 1 from the upcoming session. Okay. But as far as the pattern is concerned, you'll then see question number 2, question number 3. So question number 1 is a 50-marker question. Question 2 and 3 both are of 25 marks. Areas which are usually tested in question number 2, you'll usually see completion, review, reporting. Completion, review, and reporting. Audit reporting related question. Okay. In question 3, you'll usually see other assignments. It could be 2, it could be 3. So these can be, sometimes you can see completion question number 3. So that doesn't matter. The thing which matters is that you have to be prepared in all aspects, whether it be question 2, whether it be question 3, numbers doesn't matter. Because obviously you can attempt any question in any sequence which you like. Okay. So you have to focus this thing, technique-based areas. When I say technique-based areas, it simply means that there is a specific technique to answer these types of requirements. And when there is a technique to answer these types of requirements, when there is a specific technique to answer these types of requirement, then it simply means that you can easily score marks if you follow the steps of that technique. And those students who master those techniques, those students who practice the techniques, those students who make a habit of attempting the questions based on that technique are likely to succeed in this exam more than any other student. So you have to get a strong hold of these techniques and you have to practice these. You have to keep practicing these techniques, okay? So in question number 1, the technique-based areas which you are likely to see are risk assessment, ethics, procedures and evidence. In question number 2, the technique-based areas are audit reporting, procedures and evidence, which was there in question number 1 as well. Ethics can also be tested. Quality management matters can also be tested. Can also be tested in question number 1. So there is no hard and fast rule, but this is something based on the usual patterns. If you see question number 3 of other assignments, then in other assignments, ethics and acceptance consideration, again, ethics is a very key portion. Ethics is a very key area, and it can be tested in any question. Here you will also find the procedures, but here the procedures will be surrounding around the non-audit assignments. Here the procedures will be revolving around non-audit assignments. Are you getting this? Or there could be any knowledge area which could be tested, but it's highly unlikely. So this is a past exam trends analysis. Okay. So this is the past exam trend analysis, and you can see that in every attempt, okay, the risk assessment areas have been highlighted with green. The purpose is to show you that, see, in every attempt, you will be getting this requirement of audit risk. In every alternative attempt, usually you will get the requirement of business risk. In every attempt, you will be having the requirement of audit procedures. So the paper pattern is very much predictable. Things are not new. Areas are fixed. Concepts are not new. Then what is the matter? What is the element which is leading to the failure of students? What is the reason of failure of students? Why students are failing? Reason is very clear. If you'll ask me that, I give only one reason, one main reason of failure, and that is lack of practice, lack of directed practice. Even if students are practicing, they are lacking the direction, the proper direction. So you have to practice in the right direction based on the techniques. If you follow the techniques, you will pass through. Okay. So we'll focus those who haven't yet covered the concepts will need to go through the conceptual videos, and we will not be discussing every concept, okay, in these live sessions, because our focus will be on practice. We will be quickly going through the concept, and then we will be targeting the practice. Reasons of failure we have already discussed in the previous videos, so I'll not go through these again and again and again. Okay. So exam technique. I'm landing directly on exam technique for ethical and professional considerations. Ethics, ethical considerations, ethical considerations. So in exam question, you will see this requirement of ethical considerations, of professional considerations, ethical and professional considerations. So when you talk about ethical considerations, you have to identify which ethical threats are involved in the given scenario. The given in which ethical threat is involved in the given information. You have to analyze the content, you have to carefully read the content, and then you have to identify which violations, which ethical violations have been specified by the examiner. Usually you will find threats to objectivity, self-interest threat, self-review threats, self-interest, self-review, advocacy threat, familiarity threat, intimidation threat, management threat. These are the threats to objectivity. Self-interest threat, there the self-interest of the auditor is involved. Any situation, be it a financial interest, which is inclining the auditor towards a biased opinion. It's a self-interest threat. Be it any close relationship. Okay. Be it any financial interest. Be it a threat of losing a client. Auditor is deriving a lucrative revenue from a client, and the auditor is not willing to go against the client. Auditor is not willing to make the client unhappy. Self-interest threat, because major chunk of the audit fee is being derived. So these are the threats which you already know. It's just a quick roundup. Self-review threat, a situation in which the auditor is ending up reviewing his own work. What's the problem? The problem is that auditor will be unwilling to identify his own mistakes, even if he identifies. Auditor will be unwilling to acknowledge his own mistake, even if he identifies that mistake. And what could be the other problem in self-review threat? The other problem in self-review threat is that auditor might not identify his mistake. Because whatever I do, in my eyes, I have done the best thing. In my eyes, I have done the perfect thing. So there are two problems in self-review threat. Number one, even if the auditor is very honest, he may fail to identify his own mistake. Number two, if the auditor has eventually identified his own mistake, he will not be willing to acknowledge it. Because acknowledging mistake may bring bad reputation to him. That why you haven't done the previous work carefully. Are you getting this? Advocacy threat. This is a situation where the auditor is appearing to act on behalf of the client. Auditor is appearing, or the auditor is seen to be acting in the interest of the audit client, advocating their interest. Okay, I forgot to give the examples of self-review threat. Very common examples could be that auditor is doing financial reporting work, and then as part of the audit, reviewing the own work. Auditor is doing some taxation valuations, and then as part of the audit, reviewing his own valuations. Auditor is carrying out due diligence, and then as part of the audit is auditing the combined entity, which is now part of the larger group. Then comes advocacy threat. Here, the auditor is acting on behalf of the client. For example, preparing the court cases, negotiating finances on behalf of the client. So the outside world will think that auditor and client are one, and the auditor is advocating the interest of the audit client. Familiarity. This is a situation where the relationship between the audit client and the auditor are so close that the outside world thinks that the professional skepticism has been compromised. And in actual, it also is compromised. For example, the auditor is acting as the auditor of the client since the last 10 years. So the relationships are now so friendly that auditor thinks that whatever the client has presented, whatever the client has done, whatever the reporting has been done, it's okay. The client is not a fraudulent one. They act with integrity. There won't be any misstatements. So auditor start taking things lightly. Auditors start relying on client. And the professional skepticism is compromised, is faded away. Okay, so this is a situation of familiarity threat. So when it arises, for example, long association with the client, for example, in a close personal relationship with the client, okay, gifts and hospitality. So all these are the situations which reflect that the professional skepticism has been compromised and auditor will not be identifying the mistakes to upset the client, or the auditor is unable to identify the mistakes or misstatements. Okay, intimidation threat, the pressure from the client. The client is threatening to act in a certain way. For example, tough timelines, tough deadlines. You have to complete by that time. You have to complete by that deadline, putting pressure on the auditor, resulting in poor quality work. Are you getting this? Or any other situation in which they pressurize the auditor. There are many examples, but it will take time. You can refer the related videos which are there on the LMS. Okay. Management threat. What does that mean? The situation in which the auditor is involved in the management role for the client, taking decisions on behalf of management, acting on board of directors, recommending controls, implementing controls. Management threat. Okay. And there are safeguards. If there is a self-review threat, utilize two teams. Familiarity threat, rotate that individual, rotate their partner. It's creating self-familiarity threat, self-interest threat, huge fee of a client. So there are monetary thresholds beyond which a specific review is required. Okay. Advocacy threat. Okay. Do away with that work. Apply safeguards. Okay. So threats to objectivity. Very commonly asked, very frequently asked area. Okay. When we talk about ethics, we don't only talk about threats to objectivity. We also talk about confidentiality concerns. Auditor is bound by the principle of confidentiality, but there are exceptions, but there are certain exceptions to confidentiality. For example, the regulator inquires about the work. ACCA is reviewing your work, client's working paper files, or there is any matter which is in the public interest which you have to disclose to the regulatory authorities. So confidentiality concerns arises. Client integrity issues. The client is not honest. They're not working with the honesty. They're involved in taking bribe. Tax frauds, money laundering and allegations. What would be auditor's responsibility? Okay. How they should be acting. Very important concern. Conflict of interest. A situation in which the auditor is acting for two clients whose interests are in conflict with each other. For example, two cell phone companies. For example, one is a customer, the other is a supplier. Auditor is acting on behalf of both. Two banks. So what is good for one will be bad for other. They are competitors. So there arises a conflict of interest. It's very important to manage that conflict. And for that, safeguards are there. Have separate teams, separate offices, stop crossover of working paper files, stop crossover of information, specific review of their working paper files and things like that. So you can go through the respective area. Other professional considerations. The exam question can also ask about ethical and professional considerations. So what could be the additional professional considerations? Money laundering. Money laundering allegations. The client may be involved in money laundering activities. You have to spot on. Then what will be your course of action? You have to be watchful if any such information is given. Audit is liability. If auditor is issuing a report, opinion, any review report, What will be the auditor's liability? Practice management, any other practice management concern, advertisement, quality management, things like that. Impact on audit. Suppose if there is a misstatement, what will be the impact on audit opinion? So these are the professional considerations, and the question may require you to comment on any of these situations given, which may involve professional considerations. Then comes the business risk. When we talk about business risk, there are two risks. When you talk about the risk assessment area, there are two risks, two key components of risks. Business risk, number one. When we talk about the business risk, the name implies, the name suggests that this risk relates to business. Don't get it confused with risk of material misstatement. Don't get it confused with audit risk. This is a business risk. When we say it's a business risk, we have to consider the impact it will have on business operations. That's it. We have to think like a CEO when we are talking about business risk. We have to think about the threats to the entity, the business threats, operational threats, when we talk about the business risk. We have to think about the performance indicators. We are not concerned about the misstatements in the financial statements when we talk about business risk. When we talk about business risk, we are not concerned about the misstatements in the financial statements. Be very clear. Here, we are not concerned about the misstatement of numbers in FS. Simple. Are you getting this? Everyone? So we have to identify the information from the scenario, creating the risk. You'll have to explain the impact it will have on business operations. And we have to link it with the trends if the numbers are given. Okay. Usually there are 2 marks for business risk, but we have to explain it well, or well explained business risk. Similarly, we've got to discuss this. Ethical threats. Similarly, ethical threats. Explanation of the threat is the key to success. You have identified a threat. This situation creates self-interest threat. Or do you feel? Or the significant fee of the client create self-interest threat. Significant gift and hospitality creates self-interest threat. You have to explain it, why you feel there is a self-interest threat. You say that the auditor is doing the tax work and the auditor is then auditing the same thing during audit, creates self-review threat. You have properly identified the threat. Congratulations. But the next step, you have to explain the threat. You have to explain the threat. Why it creates a self-review threat? Because, number one, the auditor might not be able to identify his own mistakes. As an independent eye is needed, an independent review is needed to identify the mistake. Or number two, even if the auditor identifies his mistake, he will be reluctant to acknowledge it. He will not be willing to identify his own mistake. Okay? So explanation is the key to success. And then evaluation of the significant, how significant the threat is. If any such information is given, how significant the threat is. Okay? And I've already told you that safeguards are very, very important. Safeguards are very, very important. You have to give safeguards whenever you are asked about the ethical consideration. Are you getting this? Safeguards are very important. You have to give safeguards to score full marks, obviously. We'll be talking about the marking scheme and we will be attempting the question. We will be talking about the marking scheme and we will be actually attempting the questions. Okay. So explanation. Again, explanation is the key to success in business risk. Now, what about it? What is explanation? For example, the question gives you the information that the entity is operating in a highly regulated industry. And there are lots of health and safety regulations to comply. That simply means that risk of non-compliance with laws and regulations is high. Is this enough? Answer is no. Okay. Is this a business risk? Answer is yes. Because if you non-comply with the laws, if you will not comply with the laws, you will end up bearing fines and penalties. The consequence, explanation. Is this enough if you write that they'll be bearing fines and penalties? Answer is no. You have to link it up to the consequences, further consequences. What does it result in? It results in drain in companies' resources. Okay. And then you have to make a link. Fines and penalties, impact on profits. Profits will go down. Expense will go up, profit will go down. Cash flow. Outflow, fines and penalties. Cash flow will be burdened. Okay. Adverse publicity, loss of customers. So what? Loss of customers will result in loss of future revenue. Because if the fines and penalties will be imposed by the regulator, adverse publicity, bad reputation, customers will be lost. What if the customers are lost? Future revenue will be lost. That's the business problem. That's the business risk. Okay. That is why it is a business risk, in short. Then another repercussion, another consequence, potential consequence. Non-compliance may result in revocation of license, and revocation of license can result in going concern issues. The entire operations could be wound up. So the explanation is the key to success in business risk. We have to explain it. We have to explain the consequences on profits, on revenues, on cash flows, because these are the three strong business indicators. Are you getting this? Very simple, very straightforward. Okay. Then comes a very important technique. Risk of material misstatement. Now, this is the risk which has to do with the numbers in financial statements. This has to do with the misstatement in the numbers of financial statements. Okay. And there are two types of risks: audit risk and risk of material misstatement. Audit risk of material misstatement. These both are quite similar, but there is one difference, that audit risk contain detection risk as well. Whereas risk of material misstatement, risk of material misstatement contains But when we talk about audit risk, it contains IR, that means inherent risk, control risk, and detection risk. It's a combination of all three. Okay. Detection risk, the risk which arises on account of or which arises on part of auditor, because the auditor has failed to perform procedures, he's failed to depute senior resources, he has failed to perform significant tests, and on account of lack of testing or inefficient testing, something remains, some misstatement remains unidentified. That's a detection risk. There is inherent and control risk, purely relates to the numbers of the financial statements, and auditor has nothing to do with these two risks. Auditor cannot now reduce these two risks. Auditor can only identify, auditor can only spot on these risks, because these have executed, these have and actually happened. These have already had their impact in the financial statements. Are you getting this? Inherent risk, control risk. So if you talk about risk of material misstatement, it doesn't contain detection risk, but audit risk contain all three. But if you talk about the ground reality, in actual, whatever question will be given to you in the examination, 98% of the risks will be inherent risks. Are you getting this? 98% of the risks or 95% of the risks will be inherent risks. Okay. Again, I'm repeating the fact that if you need further clarity in terms of concepts, you will have to go through the recorded content, the recorded conceptual videos. Because in these sessions, we will be focusing on practice. I'll be recapping the technique, I'll be revising few key areas, and then we will be focusing on the practice of the questions, okay? So what is the exam technique of risk of material misstatement? It's very simple and very important, yet very important. First of all, we have to calculate materiality. We will see how we will calculate materiality in the next session, because we will be practicing two questions. Question number 1, September, December 23, March, June 23. We will be attempting two questions. We'll be practicing two questions from the last two attempts. Question number 1 of last two attempts. There we'll be looking at how we calculate materiality, how we draft materiality paragraph. Very important. Okay. Then we have to identify that which financial statement area is under risk. Basically, the information that contains risk. And what is that risk? We have to identify that risk. Okay. We also have to identify the area which is under the risk problem. It's good if we identify whether it's inherent risk, control risk, or detection risk. And is it a wrong valuation, wrong recognition, inappropriate presentation? You can write it down. The most important thing is accounting treatment. This is the area where the students lack the most. They are very poor in drafting the accounting requirements. And we'll see where they lack. Then you have to apply that accounting treatment to the scenario. And why you feel that this might not have been complied with? Because obviously this is the main reason of you posing the risk. This is the main reason for you to pick up that risk. So why do you feel that this might be the problem? Then risk impact. Is it understatement, overstatement? In which area? Area we have already discussed here. Which financial statement area? Are you getting this? And impact. Understatement, overstatement. Under disclosure, what's the problem? Plus, if you are given with the numbers in the question, if you are given with the the numerical results, the financial statement extracts, then you are also required to identify relevant trends. You have to link those numbers with the given information. And we'll see that how we do this. Okay. We can make use of relevant ratios. Gross profit margin, comparison from previous years, operating profit margin, interest cover, working capital ratios, liquidity ratios, return on capital, gearing, things like that. And there is a marking scheme for risk of material misstatement. And we'll see this marking scheme when we will be actually attempting the question. Okay. Just going through one audit risk. So going through one audit risk. You might already gone through these audit risks. So I'm simply giving you one example of audit risk, and then in the next session, we will be actually drafting it. So you will be seeing multiple such audit risks being drafted. Okay, see, during the year, company purchased shares with a cost of $200,000, which a fair value, the reporting date of $250,000. And what's the misstatement? Misstatements of $50,000. Is it material or not? It is material to the total assets. Whatever benchmark is given to you, you have to assess the materiality. Done and dusted. Accounting standard, IFRS 9. If you don't know the accounting standard number, don't write it down. Simply write as per the requirements of the relevant accounting standards. Okay. But the requirement should be mentioned. The shares should be measured at fair value through profit and loss, unless a designation is made to be measured at fair value through OCI. That's the requirement. Are you getting this? And then apply this requirement. The shares should be valued at the share price at the reporting date, or any increase, decrease value taking to the statement of profit or loss or OCI. So, what's the problem? The shares are valued at cost in SOFP, which means that investment or profit, investment and profit for OCI is understated by $50,000. Understatement of investment and profit or OCI. So the area, materiality, area, risk impact, counting treatment, counting application. Everything is there in this drafted risk. Materiality, area, counting requirement, application, risk impact. All 5 elements. Are you getting this? So this is how we should be drafting the audit risk. These are the acceptance considerations. Yeah. Here comes the audit procedure. Audit evidence and procedure related guidelines, because when we will be practicing question number 1, audit evidence and audit procedures, these will also be having their role play in question number 1. Every procedure or every evidence will fetch you 1 mark. if properly drafted. And what students do, they lose their easy marks in drafting audit evidence or audit procedures. Very easy marks. They have to remember a few things. Number one, you have to test every fact in the given scenario, because in exam, you will not be given the requirement what are the, or list down the audit procedure of IFRS 16 leases. You will be given a scenario, a context, and in that context, you will be required to perform audit procedures. And that will not be a fixed scenario every time. So you have to apply your professional understanding, professional judgment, and you have to pick the facts from the given scenario, and you have to think what audit test I can perform on this fact given in the scenario. You have to recall these two checklists, AEIOU and SAD3. These two checklists will help you out in recalling the procedures. See these checklists. AEIOU, analytical procedures, inquiry and confirmation, inspection, observation, recalculation. Analytical procedures, ratio, calculation, compare. Inquiry confirmation, third-party confirmation, direct confirmation, creditor confirmation, legal confirmation, tax confirmation, inquiries from management, inquiries from directors, whatever. Inspection of documentation, inspection of invoices, inspection of purchase orders, inspection of BOD minutes, whatnot. Gate passes, observation of procedures, observation of reconciliations, observation of controls, recalculation, reperforming depreciation, recalculating depreciation, taking the fair valuation working, recomputing it, applying the rates again, things like that. Audit evidences. SAD3, SAD, S subsequent events. For example, year-end inventory, realizable value of the inventory, post-year-end selling prices. Subsequent event will give you the evidence. Okay. A2, accounting records, assets inspections, accounting record, vouchers, invoices, posted entries, brought forward balances, things like that. Assets inspection, the physical inspection of assets. Okay. D2, directors and documents. In directors, there could be directors representation, management representation, BOD minutes, and documentation, the lease agreement, share-based payment agreement, gate passes, invoices, third-party confirmation, we already discussed. Debtor confirmation, creditor confirmation, tax confirmation, legal confirmation, any confirmation. So these two checklists, these go hand in hand. These are not two separate checklists, because we see third-party confirmation here as well, here as well, documents here as well, here as well. So these two checklists together will give you all the hints of the necessary procedures which you might be required to give in the answers. Are you getting this? So don't forget to mention the purpose of your test. Now, that's another important thing. While you are performing this test, obviously, you are a professional student. You are not performing the test just for the sake of fulfilling your answer sheets. No, you are not writing it for the sake that you have already learned it and you have to reproduce in the examination, whether it is linked or not. No. Obviously, the procedure should be having the link with the requirement, the link with the scenario, and you know that what is the purpose and objective of this procedure. Okay. And why are you obtaining this evidence? And you have to remember action, source, and purpose. What action are you performing? Inspecting. What are you inspecting? BOD minutes. Why are you inspecting BOD minutes? So that we can see the rationale of this investment, approval of this investment, and the future plans of the directors. Where are all these three? What are you doing? You are inspecting. What are you inspecting? The lease deed, the lease agreement. Why are you inspecting it? So that in order to determine the lease terms, okay, finance cost implicit in the lease, underlying asset, things like that. What are you doing? Inspecting the share-based payment arrangement agreement. Sorry, inspecting. What are you inspecting? Share-based payment agreement. What is the purpose? To determine to see terms and conditions attached to the share-based payment agreement. Who are entitled to it? Which category of shares? What are their fair value? Grant date? Is there any grant condition attached? Things like that. So whatever procedure you are drafting, action, source, purpose. Are you getting this crystal clear? So I think we have discussed the key techniques revolving around question number 1 usually. In question number 1, we can also see acceptance considerations, and acceptance considerations are very simple, straightforward. Ethical issues, very important. Whether it is audit acceptance, whether it is acceptance of any non-audit assignments, ethical issues are very important. And we know what are ethical issues. All issues, threats to objectivity, confidentiality concerns, conflict of interest, integrity. Competence, whether we can do the audit, are we capable, competent to do this audit exercise? Do we have sufficient staff and resources? Can we meet the timing and deadlines? Are there any other professional considerations, money laundering allegations, tax investigations going on? Are there any fee considerations, fee problems? Is it the work being too much and the fee being too low? Or overdue fee or excessive fee? Is there any conflict of interest, integrity of client, professional clearance from the previous auditor, preconditions of the audit are present or not? Can we accept non-audit assignment? Yes or no? We have to see the checklist. For that, plus, this entire checklist is still active, even in case of non-audit assignments, except few, except for professional clearance, except for preconditions of audit, except these two. All others are applicable here in case of non-audit. In case of non-audit as well, these are applicable. Ethics, ethical considerations, we should be considering it. Competence, staff and resources, timing and deadlines, fee considerations, conflict of interest, all are applicable. Plus, who will we be reporting to? Bank, government authority. If you're reporting to bank, will the government authority also be holding this report? Will the shareholders be also getting this report? If yes, our liability increases. Is it a review opinion or audit opinion? Which extent? What is the extent to which the evidence will be available? Is it a future cash flow forecast? Evidence will be relatively less, or there might be no evidence available. Subject matter, is it a profit forecast or cash flow forecast? What is the subject matter? Or is it a due diligence report? What the auditor will be checking in this? For example, in the forecast, will the auditor be checking the entire forecast or only profit forecast? What is the purpose of the subject matter? Is it being prepared to submit to the government authority or the bank? Who prepared the information? Staff was experienced or not? When it was prepared. If it was prepared in the past, years ago, might not be relevant. How was it prepared? How the data was collected? How the data was assimilated? All these factors will determine whether the auditor accepts this assignment or not. So these are the areas usually tested in question number 1. Okay, so let me show you Okay, so in the next session, we will be attempting to question number 1. That means for the 2 attempts, the last 2 attempts, I'm just simply opening the screen for your reference so that you read these questions or plan these questions in advance. Okay. Let me share the screen again. I hope you can see these. September 23, December 23, March, June 23. Question number 1 of both of these attempts, we will be attempting in the next session. Are you getting this? Let us have a look of it. Okay. Audit of Hammer Group from December 23. Question number 1, Hammer Group. We'll be reading this entire question. And Encore Co. These 2 questions. Question number 1 of December 23 and question number 1 of June 23. You have to go through all the requirements. You have to go through the question. And then in the next session, we will be working these questions together. Go through the techniques once again, refer to the conceptual videos if you are not comfortable with the concepts, and we will be targeting question number 1 first. We will be practicing multiple question number 1s, the 50-mark questions, and then when we will be comfortable, we will be moving on to question 2 and question 3. Okay, getting this? Dear students, is everything crystal clear? Is everything as per your expectations? Any questions, any queries, please do let me know before we end this session. The next session will be on Thursday. If there will be any change, I'll let you know. The next session is on Thursday, and we will be practicing question number 1 from the last 2 available attempts. So thank you so very much. Dear students, thank you so very much. Take care a lot. May Allah bless you all. See you in the next session. Bye-bye.